Hi and welcome back to my channel. If you're new here, I talk about stocks, the stock market, and pretty much anything else that you want me to. Today we're going to talk about my portfolio and of course the issue going on with the Fed increasing the money supply. I have an article about why that could be an issue and what that really means. But first, I inputted another $150 into my account last week, meaning my total investment is now $4,150. As we can see, I'm down quite a bit from there, but on the day up $52, which is good to see. For the past week, up about 5% or $172. On the month, up 13%. And when we zoom out to 3 months, we can see I'm down, just as the rest of the stock market has been, down about $670. Over the past year, down about 12% or $490 and almost identical all time. But like I said, my portfolio is swinging back upwards. There is some good there, and I'm fortunate enough that I have been able to keep my job, which means that I intend on investing every single week. What did I do with that $150? Well, I bought $30 more of Bitcoin, the cost there being $69.8777, meaning it bought me another 0.00429 Bitcoin, which brings my total investment in Bitcoin now to 0.0951 Bitcoin, so just over 9.5% of a Bitcoin, which is terrific. I bought 3 shares of SPHD, which of course is my largest stock holding, that being an S&P 500 ETF with a monthly dividend, bought 3 shares there at $99.18, being the total cost. I bought 2 shares of Vivint Solar at $541 a piece, bringing the total cost to $10.82 and giving me 50 shares exactly. And I bought 1 share of Penn National Gaming or Barstool Sports at $13.51, bringing my total investment there to right around $50 and 3 shares, which is great to see. But we'll go ahead and get to the article right now and then talk about my portfolio. And first, don't forget to like, comment, and subscribe. I'm up to 77 subscribers. Thank you so much for the support. All right, here we have an article from marketplace.org talking about what it means that the Fed has increased the money supply, what the long-term impacts of that could be, and they break it down in sort of basic college-level economic terms. So for those of you who have not taken economics courses or need to brush up on them, this is really a great article, and I really like it. So here they talk about a little bit of the background. They said, this article being a couple weeks old, of course, they said that the Fed is making $2.3 trillion available in extra credit to spur loans to cities and small and medium-sized businesses. And so the question becomes, where is this money? Are they taking it from taxpayers? And they explain it as it being more as magic. So here an economics professor at Barnard College says it's more like creating money out of thin air. So they said that when the banks want to fill regular banks full of extra credit, so that they can write new loans, the Fed buys securities from those banks, often in the form of bonds. It pays for these securities not in gold bars, it pays by typing in numbers that amount to a credit. So they say now the bank has more money to loan out, and they give the example that when you finally secure that home equity loan, the bank doesn't send you $50,000 in $20 bills in a suitcase. They just tell you electronically you have $50,000 of money that you can now go spend. So here they talk about this being similar to what happened in the last financial crisis of 2008. They said to lend to a bank, we simply use the computer to mark up the size of the account they have with the Fed. So it's much more akin, although not exactly the same, to printing money than it is to borrowing. And so that's really where we get the term printing money from. So they say, note that printing money is just a metaphor. The Fed has no actual printing presses, but it has a keyboard which only a central bank can use to magically increase the total supply of money, which helps stimulate the economy when a disaster is afoot. So they say, why not do this all the time? Well, clearly this goes back to any sort of history lesson. You can't just print money. The more money that you print or the more money that you add to the money supply, the less valuable that money becomes, and that's what we know as inflation. So certainly some of the best examples of inflation would be Germany after World War I, Zimbabwe in 2008, and most recently, we know that Venezuela has struggled with hyperinflation. So in moderation, this can be good, a good way to spur the economy, but we know that in the long term, it can be disastrous, and we really have to be careful about this. That being said, this is one of the Fed's main jobs, is keeping inflation in check and working with the money supply. And most people would say that the Fed has done an extremely good job of this over the past 100 years. All right, now we're on to my portfolio. So we'll talk about SPHD first, because of course that's my largest holding, and I did buy another 3 shares last week. Average cost is now down to $38.85. I'm down a lot on this all time, but the big reason that I like this one is that monthly dividend. And of course, I think that things have struggled so much recently that there's a lot of upward growth for ETFs like this. So over the last month, still up 12%, but over the last 3 months, down 25%. And I always like to see this 5-year chart. We can see how much that drop off really was. So it accounts for 14.4% of my portfolio. And I'd have to double check, but I think the dividend yield on this is between 5 and 6% now that it's down so low, which is a good sign, I would say. Next up, we'll talk about Coca-Cola, being that this is my second largest holding. Very high buy rating on Robinhood, dividend king. It has done pretty well over the past week, so we can see up about 5% today, 5% in the last week, and even in the last month, up about 12%. When we zoom out to the last year and 5 years, we can see pretty consistent, slow growth, a drop off, and a recovery. And over the last 5 years, we can see that is even more evident. And I don't want to bore you too much, so we're going to start skipping down to my smaller holdings. Microsoft is a company that I keep talking about purchasing more shares of. The issue here being that Microsoft has gone up in price, and my budget is looking like about $150 a week. It would be doable. I'd have to move some things around, but let me know what you think about Microsoft or any other tech companies sort of in this price range. So we know that because of everybody going online right now, tech companies are in high demand. I always like to talk about the cloud infrastructure that Microsoft has set, high buy rating, very good earnings, decently low dividend, which could actually be a good sign in this case because it means they have room to grow their dividend, even if earnings do not go great. So over the past the past week, up 4.7%. Over the past month, up 20%. When we zoom out to the year, we can see that they did struggle a little bit at the advent of this outbreak, but have recovered very nicely. And over the past 5 years, 320% growth. Can't ask for much more than that. Next up, we'll talk about Realty Income, this being my REIT with a monthly dividend. So I do have 3 shares right here. Accounts for 4.5% of my portfolio. I am down a little bit, 12% on this one, but REITs have been hit particularly hard. People cannot pay the rent for their businesses and certainly are struggling to pay mortgages in general. So it is up 5% on the day, that being because the first round of checks is set to come out tomorrow. Those rounds of $1,200 checks, down 12% on the month. When we zoom out to past 3 months, down 26%, and 5 years, we can see it's pretty indicative of what's going on. Still up about 14%, but that large drop off. I'm definitely going to be buying more of this. I'm not sure if it's this week or the following weeks, but let me know what you think and make sure to stay updated on it. And we'll drop down to Walmart. This is another interesting one because they've actually made out very well with what's going on. So total return on this is up about $10 or 8%. We zoom out to the month, we can see they're up a lot. Over the last year, we can see that there really wasn't that large drop-off we saw with other companies. And over the last 5 years, very consistent. Low dividend here, which means a lot of room to grow, high buy rating. And I think that Walmart is going to continue to do well, really, because they know exactly what their game plan is. Sell things at a low price, at a consistent price, and really don't try to do anything beyond their means. That's what Walmart's always been very good at, and I don't see them changing that anytime soon. And of course, we'll talk about Charles Schwab. I always like to talk about them. I haven't talked about them a whole lot lately. A lot of these financial companies have started to struggle. People aren't investing money quite as much, but I think that certainly with those paychecks starting to come in, people could be investing more often and more readily. So up about 5% today. Everything was up. The stock market performed very well. Over the past month, we can see it's up 20%, but over the last 3 months, it's not been very good. Over the last year, that downward growth, and over the past 5 years, we can see that they were trending upwards and have struggled downwards. What we do see here in about November is that this was at the height of their purchase of TD Ameritrade, so definitely something to keep an eye on. Decent dividend yield here. I'm not sure what I want to do with this position. I think I want to buy more, but I'm just not totally sure, so let me know what you think. I'm always open to suggestions. And we'll keep today's video relatively short, and the last thing we're going to talk about is Bitcoin. So the total return on this is down about $200, which is abysmal, I know, but I always like to talk about the fact that Bitcoin is going to peak in roughly a year and a half, according to pretty much all of the models. My average cost is now down over $9,000, which is awesome to see. As I mentioned before, quantity is about 9.5% of a single Bitcoin. I'm happy with that, and I can't really complain. The price has been so all over the place over the last year that it's hard to track exactly when I'm buying or how much I'm buying. But when we zoom out to the week, we can see they're down quite a bit. Over the past month, they are up. And 3 months and a year, we start to get a better picture of what's going on. So downward trend here after the large growth last summer. And over the past 5 years, up about 3,000%. I've seen a lot of analysts and projections for when the Bitcoin halving date will be. I'll make a video about that in a couple weeks, a little bit closer to the halving date itself, but I'm seeing between May 11th and May 13th at this moment. Maybe you've seen something different. I'm not totally sure, but I'll be back with another video at the end of this week. And of course, next week I will continue to invest more money. So stay tuned and thanks for watching.